Welcome to Impact Farming, where we introduce you to the people and ideas that will have a massive impact on your farming operation. Brought to you by Farm Marketer. Sit down, start the engine, and let's roll with today's show.
Hello, everybody, and welcome back to another episode of the Impact Farming Show. Today we have JP Gervais joining us again. JP, how are you?
I am very well. What about yourself?
Good. We are here again. It marks the year every time we talk, and man, does time fly.
Absolutely. Every year we got this little appointment here to check in on farmland values and the state of the ag industry. Always looking forward to it. So absolutely very happy to be here.
Thank you so much. I always enjoy our conversation. So, JP, you are the Vice President, Chief Economist at Farm Credit Canada. You are the gentleman that always speaks to the land values, interest rates, the economy. So I am excited about our conversation. Every year, FCC releases the Land Value Report. You released the new one this spring. So we're going to be chatting about farmland values across Canada for 2024. So can you share the highlights of the report this year?
Absolutely. So just to a little bit set the table, I mean, we do this on an annual basis, on a calendar basis. We also do a mid-year check-in that we release a little bit later in the fall. But this particular report you're talking about is kind of our flagship report, I should say, because that's the one that brings a lot more detail. We are actually reporting about average increase in land values across each of the province, and within the province we have different regions as well. So there's a level of detail that is very well appreciated by those that go to the report to find the information that they need. We also provide a little bit of an analysis of a range of farmland values in each of the region measured in dollars per acre, right? So as you very well know, there's no piece of land is alike. And so there's a lot of different variability within, we report on an average, and some of the discussion we'll have to, together today will be about patterns and trends, but there's a lot of detail and a lot of differences across different regions and within the region as well. So again, tons of information. Believe that this is all information that can be useful for farm operators and owners to actually action what I would call their strategic plan. So wherever you find yourself in terms of the stage of your business, whether you're looking to consolidate, whether you're looking to expand, go through a transition, more information actually helps you make better decisions. And so that's the intent here as we're, and I would just add one little thing, and I'm recognizing that you asked me about the results, but I just feel like it's important to set the stage. There's one little thing as well, is that this is not just about FCC, meaning that, in the course of our business, it's not just the transactions that we finance as a financial institution. It's really just as well the data that we gather across the entire industry, right? So that's not, again, as we appraise some land for a transaction that we do finance, we do gather transactions and data about other transactions that exist out there in the marketplace. So it really is a very thorough analysis. So you were asking me about, what the results are. I mean, by the end of the calendar year 2024, the increase in average land values in Canada was 9.3%. Okay. So that's very strong. I mean, 9.3 is very strong in my opinion. What I find interesting is to look at, this is an average for the entire country. So if you look at across the board, what does that look like for different provinces? Only 2 provinces actually recorded an increase higher than the national average: Saskatchewan and British Columbia. Saskatchewan, I have to look down at my numbers, just not make sure that I don't make a mistake. Saskatchewan was 13.1% average or increase in average land values. That's the strongest recorded across the country. So very strong average increase. And as well, thinking that it has a big impact on the national average because Saskatchewan represents roughly 40% of all farmable acres in Canada. So a big concentration of farmland, obviously, in Saskatchewan, very strong increase. British Columbia is 11.3%. It's a bit of a, not going to say a roller coaster, but certainly large increase in 2024. But if you go back in previous years, it was not as strong. So there's a lot of variation in British Columbia, lots of some very, very expensive farmland located near urban areas, some less expensive farmland located a little bit further away, not as productive, those type of, like, in a very diverse province when it comes to farming activities, whereas in Saskatchewan you would say 80% of the business is grains and oilseeds basically. Prairie overall, 6.5% in Manitoba, 7.1% in Alberta. On the central part of the country, Ontario was a little bit lower than most provinces at 3.1% increase in average farmland values, and just the fact that it's been very strong increases in the past in Ontario, and land values are really high to begin with, so a smaller percentage applied to a big dollar amount, it still makes it a sizable increase when measured in dollars. Quebec's at 7.7, and we got lots of different increases as well for Atlantic Canada. So overall, very strong, nonetheless, market when you look at the entire year, but we may have a chance, you and I, to speak to some of the most recent trend in the year 2024, maybe early 2025 as well. So I'll leave it at that, but that's the picture for what it would look like in 2024.
Okay. So I have two questions, and you can just take it where you want to go and answer whatever one makes sense first. But is there anything that really surprised you personally, FCC, when you're looking, you're like going, whoa, what's going on here? And then the next one would be, how did this compare to previous years? So we can kind of get a feel for what's happening in the industry.
Yeah, so very good question about what surprises me or FCC. And yes, there is a surprise, and no, there aren't any surprises. And let me explain to you, right? Because as you mentioned in the introduction, you and I have been discussing farmland values now for a number of years. And I feel like I'm always going in front of you and telling you, wow, I was expecting a little bit of a lower increase. And feels like it's a bit redundant for me to say, because, like I said, the average increase is 9.3%. And overall, I'm a little surprised that it's still very robust because, we've had lower commodity prices in 2024. For the most part of the year, we still had elevated interest rates, still had elevated input costs, despite the weaker commodity prices. 24 was not a terrible year when it comes to weather, but bottom line is we had a few consecutive years prior to that had some challenging weather. So bottom line is I'm a little surprised that it's still as strong, but I feel I'm saying the same things year in and year out, and that we've had the same conversation. So I'm a little saying, hey, I shouldn't be surprised, because at the end of the day, there's very limited supply available. And yes, maybe some land stayed on the market a little bit longer, did not necessarily sold for the price that was expected by buyers. But the bottom line is there's still very little available. And when something becomes available, and it's located near your farm, you're gonna jump on it. And there might be just a few buyers, but to create a bit of competition, it doesn't take that many buyers. And I think that's exactly what happened is that we still have farm operations that, despite the challenging environment when it comes to commodity prices, for example, still feel very confident about the future in this business. And I 100% agree with that. So bottom line is surprised a little bit, but I think, that surprise at some point we'll have to just call it for what it is. It's just that the market's really strong. Now, 2025 seems to offer a little bit of a different story, and we can go back to that, because your other question was about how did it compare to 22 and 23? Well, the rate of increase is slowing down. So, 2022, we had 12.8% increase. 2023, 11.5, now 24, 9.3. So it's trending and slowing down, and the rate of increase slowing down. So land values are still going up, but we have a rate of increase that's slowing down. but the slowdown isn't as significant, I could say, that as I would have expected, right? So there's still a lot of strength in the market. Maybe things are starting to evolve a little bit with everything that's going on with regards to the trade environment, the uncertainty with regards to the economy and all that. I do think that's something to think about, but bottom line is that's certainly slowing down for sure, the rate of increase at least, and maybe even the market itself, but we'll get back to that for sure.
You know, JP, when you said that, you said, every year I'm saying the same thing. I flash back to our conversation last year and probably the year before. Yep. But it's a little bit, I'm not risk adverse as a farmer, but I'm not unbelievably unsafe aggressive when it comes to business. And I've thought it would slow down a little bit, but I talked to you, I talked to real estate agents, and even when it was at the peak of real estate, interest rates, pardon me, agents are like, nope, my phone's ringing off the hook. It's going. And same as you, it's kind of like, I figured it would people would dampen their interest, but no, which I guess is a good thing. Farmland's safe. People need to eat.
Yeah, exactly. So first off, I mean, the demand for what we grow is still very strong. So that's one thing. That's a positive. So despite all the trade disruption and despite all that we are saying about trade tariffs and all that, the bottom line is demand for Canadian ag and food is still very robust. Yeah. And I don't know that this is going to weaken in the future. What is the issue is profitability at the farm level, lower commodity prices, high input costs. That's still very much on the mind of, if I go to our customers, it's what they're pointing out as the number one source of risk. And then, you know, I think it's a confidence, like farming is, you know, when you're farming, you're taking on risks. And I think it's like there's confidence in the future, despite all the risks that are quite significant. And the idea that, you know, we're executing on the business plan type of, right? So whatever, again, there are lots of different reasons why people are buying or selling land. And it just needs to fit within your strategy, right? So where do you see a business 2-3 years from now? Maybe it's steady, maybe it's not growing, and that's fine. Or maybe it is about growing, or maybe it is about transitioning to the next generation. Whatever that story is, then, you know, the decisions behind that need to match the strategy, right? How you see a farm evolve in the next 3 to 5 years, basically.
Well, and JP, I'm going to say the same thing right now that I said last year, because I'm flashing back again. Same with us. There's a piece of property that we own. It came up right attached to our farm. One, we don't want anybody right beside us. And two, having cattle, you just move your cattle and it just hits the block of our land. It's perfect. We spent a good chunk of change. It makes sense financially. But if you look at the neighbors, they'd be like, what did they do? Yeah. So what is the price on that? So that's exactly what we're talking about here, right?
It's the value you attach. I mean, it's intrinsic to your business. Like the value you attach is nobody else's value in the sense that, right? What you just described is makes sense for your business, makes sense for your financials, makes sense for your risk appetite, makes sense where you want to, you know, how you think of the business.
Right.
Whereas, you know, you take the same piece of land, put another farm looking at it, and they'll say, no, it doesn't make sense for reasons A, B, and C. So 100%. And like I said, it doesn't take much of a competition to kind of fuel the price increases we've seen in recent years. Yeah.
Well, and the worst thing with land too, where you'd be a little more aggressive than a vehicle or a piece of machinery, is you get the wrong person that buys it, they're holding it forever. Right? It's not like
once
machinery.
in a generation.
Yeah, it's not. And exactly that. We only have X many years of farming left. Yeah. So what if it comes up in 20 years? It's kind of too late for us. I mean, we're still young enough, but it's over. So where somebody might be not as aggressive with machinery, because it's machinery, there's more. It's that land for your farming career. And when's it coming again? Never.
Never. Yeah. It's not coming back until that next generation, right? And whenever that is, right? Because people are farming longer and longer. We keep talking about the average age of the farming population. Well, it's going up, and people are healthier, living healthier lives, and technology helps. Right? It's not what it was 20 years ago in terms of the physical
Yes.
strain on when it comes to farming. It's still a very, very demanding profession, but the bottom line is it's less than it was 20 years ago because of technology. So all of that together is like, absolutely, that land's not coming back until a long time.
I know. And that's where, as a farmer, and I know the feeling, it's like, ooh, we're a little uncomfortable. It makes sense. We're not being silly, but you got to just take that leap if you want it, right? So, same as you. Does it surprise you, JP? Does it surprise you, Tracy? Yes and no, right? Yeah. Okay,
Exactly.
so a few things I want to ask you. We're well into 2025 already. I'm not sure how those 5 months have gone already. So I want to chat with you about 2025 so far, because you guys will have a probably good idea and some records already. And then what you are seeing now and what you expect for the next part of the year.
Yeah. So this is where it starts to get interesting, honestly, because
Okay.
we ended 2024 with still lower commodity prices. Interest rates were coming down, and we were starting to see that last quarter, that last 3 months, buyers being a bit more cautious. And that momentum carried away for the first 3 months of 2025 to the point where we're starting to see a little bit of weakness, a lot fewer transactions. So that's one thing. It can be for a number of different reasons, maybe fewer buyers or fewer buyers willing to pay that next price, right? That next increase that people kind of assume because it's been so many consecutive years of increase. So maybe fewer buyers willing to pay a higher price. And then maybe when sellers realize, maybe the market's a little bit weaker than what we had 6 months ago, pull it back. Anyway, fewer transactions for sure. And that's pretty much across the prairies. And a little bit of a weakness in prices, meaning that if you look at the first 3 months of 2025 compared to the last 3 months of 24, we've seen in some cases lower prices on average. So that's something that it's just early. It's a market that's not as fluid, if I can say. It's not we're not trading a bushel of corn here or a bushel of wheat. We're trading land. And so you need a little bit more data to kind of say, yeah, the trend's shifting. But yeah, we're starting to see definitely that there is a little bit of weakness in the market. We're starting to see in some areas land prices dropping, and not dropping significantly, but certainly, in that neighborhood of 4 or 5%. And so that's going to be interesting to see what that second quarter, like the quarter we're in right now, because then that's going to kind of all together, the first 3 months plus the 3 months we're into now is going to be the one that we're going to be reporting on sometime late summer when we're going to compile everything, right? So I don't have really hard numbers to give you today, but there is definitely, I would say, a lower or weaker market from a buyer standpoint that is kind of stopping all the increases at the upward pressure on land values, and maybe even in some cases is leading to some small declines. And that's something that we've not, well, like I said, we'll have to wait and see if more data, because like as I said, right, that there's not that many transactions in the span of 3 months, but there's definitely a weaker market now, I'd say in early 2025, which makes sense as well. If you think of all the uncertainty, you think all the discussion around trade and
We go. Yeah.
what's going on south of the border, even our own trade disruption with China when it comes to canola, all of that is weighing on farmers, in terms of their outlook for the next 12 months. And so for farm operators that are still looking to buy, say, hey, I'm still in the growth mindset, but to realize that there's a lot more uncertainty, I think it makes sense to just say, maybe I'm just going to wait a little bit and And so that all together, I think, is what we're seeing right now in the marketplace.
I'm glad you went there, JP, because the next thing out of my mouth is, JP, we're going political. We're not going political opinion-wise, but how can we not? I know farmers are great at just trying to weather the instability and go, okay, it's a long game. But the amount of political uncertainty, trade unrest, economic unrest that has been in the first part of the year, and I know we've had these periods before and definitely in the past, but how are you sitting in the first 3 months of 2025 and going, yeah, let's do this, let's grow, when tariffs have been applied to canola and our leader down south is just really mixing it all up? Even as a cattle farmer, it's like, okay, what's going to happen, right? I don't know that. Again, if that perfect piece of land came up, that's a different discussion because it's land, but you're sitting there, you're going, what does our world look like? How do you feel confident buying land?
Yeah.
Right.
So that's another piece of information, right? That kind of change your outlook on, I'm going to wait a bit more, maybe. Hey, I'm still very confident in the future.
Right.
But things are going to change. Like, honestly, for us as an industry, as a country, we have to think of our relationship with the US. And yes, there's a president there that for another 4 years, but I'd say what we're seeing in terms of trade is going to lead us to something different than what we came to rely on when it comes to trade in the past. And I don't know what that next thing is going to look like that next kind of, I call the steady state of trade. Is that going to be trading blocks? Was that going to be us leaning a lot more on other partners? Or I don't know, but that's like, we're going through a change. And so that can lead to more uncertainty. The trade. So I'm confident that, so overall, if you look at the commodities that we trade, like we're only 35% to the US, but it's everything else. It's like the US with China that actually lowers the price of canola and soybeans, and right. So it's all those connected things that weigh on the environment. So we're going to have to navigate that until we get a little bit more clarity on what that looks like. In reality now, if you look at, as we speak today, I mean, canola prices have been, the canola export pace is significant, is really high. The canola prices have rebounded quite well. On the livestock side, things are, even on the hog side, it's been better than, a month ago even. So cattle prices are still record high. So there's just this, like, it's a narrative. But if you keep your eyes on, here's what the world needs, and we're one of the countries that can deliver it, like both Canadians and beyond our borders, I think there's a lot of positive. But I'm not discounting that as a business owner. The worst thing is uncertainty, right? Like you, as a business owner, when you're planning, you're making investments, buying equipment, buying land, buying cattle, like, the worst thing is the uncertainty. Like the stability, predictability, all these things now seem to be like, you can't take them for granted because they're like all being challenged right now, and that's just the unfortunate part. But businesses that are able to be agile, being able to reassess where they're at, reassess the marketing plan, reassess their risk management, reassess their finances, reassess and do that, and still a good managers, like in terms of if their crops, looking at their yields, if they're on the livestock side, looking at the health of the herd, looking at all these things that make it a profitable, I think still going to be successful. But I'm not discounting that, dismissing the fact that there's a lot of uncertainty for sure.
Yeah, I'm happy that you shared a little bit about that. I had 2 guests on recently, and we kind of dove into the political climate right now and trade and tariffs and US getting a little more protectionist. I don't think this is just a blip. I think things are changing, and it's more than just Trump, and we'll see what comes out of this. But I appreciate that you share your thought on that too, because you're
100%.
well
I think
connected.
it's important to emphasize, I'm 100% behind the idea that it's not 4 years and then we'll go back to what it was.
Yeah.
It's changing, and this world order is changing. Who
Yeah.
knows? I have no insight, or I have thoughts, but there's no certainty as to what that's going to look like. It's getting defined in front of us, like we're seeing this in real time. And like I say this, like Trumpism is a thing. It's not an individual. It's actually, if I can call this a movement, but like there is something behind this that will outlast the president, in a sense that there are other people, party, that would take this to some, in the same direction. And so I think it would be a mistake to assume that, this is all, like, I think this is all being redefined, and I think we need to take our place as an industry. I just wish that we all realize that we have so much to offer as an industry. Like, just the economic impact we have in this country, if you think of rural communities, if you think of, for Canadians overall, being able to afford safe and high quality food, the ability that we have to actually solve some of the food security challenges in the world. Like, there's a lot, like food manufacturing in Canada is the largest manufacturing in Canada. We talk about cars, we talk about a number of different things, all good. Bottom line is, like, we're a big deal as an industry. So we can be a part of the solution for Canada to actually diversify its economic base and be an industry that grows and then is an engine of growth for the country. I 100% believe it. Unfortunately, I think we're not there yet, but I'm confident that with a little bit more discussion, we'll convince a few people that, hey, there's lots to offer here in this industry.
Yeah, I agree. So my next question really builds on that. Interest rates. We're here right now. The interest rates was there, coming down. Where do you see interest rates for 2025? And let's look a little bit further out from that. What kind of trend are we in for interest rates?
So definitely downward trend since really the summer, or even a month prior to the summer of 2024. That interest rate for the Bank of Canada has been coming down. As it came down, it brought interest rates in the marketplace down as well. Now we're a little bit in a pause, and people ask, well, just the exact same question you just asked, right? And I say, first off, it's not just about trade disruptions. Like, we have to acknowledge that prior to trade, we were coming in this economic environment, in a sort of a weak spot. Like, the economy was not doing super well. And so that hasn't changed. If in fact, if anything, I think it's compounded by all the trade disruptions. So I do think that we're going to end the year with interest rates lower than what they are now. The question is how much. I'd say another at least 50 basis points, 0.5%, probably more if there's more, because right now we're like, it's the tariffs, they're on, they're off, they're on, they're off. But if indeed the US is pushing for more concessions out of Canada, and then we don't agree and so forth, and I think they're going to be more trade or tariffs, taxes put on Canada's exports, and I think that's going to be bad for our economy. So I do think that we're going to end the year lower even than 0.5, if I were to say. A lot of it depends on how this situation is going to evolve. There's some, I have to say, on the positive side, there's some really positive signals that are coming from the relationship that's just getting started with the US and Canadian administration. So we'll see how that evolves. But I do think that interest rates will go lower. That's the forecast we work with at FCC. By how much is really the question. 2025 at another 50 basis points, likely. And I think in 26, a lot of it depends on how this trade relationship is going to evolve. But I do think that, like, we have to acknowledge that the economy was not in a super good spot coming in this trade disruption status, and now it just amplifies, I think, some of the issues that were already here when it comes to our own economy. So I'd say interest rates lower for sure.
Oh, okay. So, silly question. I got to think back to Economics 101 in university, but Are we in the anywhere near, and I mean, it's so hard to predict 5 years. What's a 5 year life or business plan in this world that we live in? I don't think we do that anymore. But are we anywhere in an environment where we would see a hike in interest rates again?
Yeah, well, you can make an argument that if we start taxing exports back and forth between Canada and the US, like I said, we're in a kind of a pause today. Tomorrow, who knows? But technically, there's supposed to be a pause on taxes for another 60 days at least until there's more negotiations, whatnot. But the bottom line, if we go into a full-blown tariff situation like we were looking at or staring at sometime in early March, then yeah, like inflation would go up, and with that, interest rates would go up as well. It's just that under that scenario, I think the negative impact that all of this would have on the economy would offset the inflationary impact, right? So I think, taxes are inflationary, and in that sense, they could lead to higher rates. But the bottom line is, I think the largest impact is slowing the economy and leading central banks, the Bank of Canada in this case, in our case, to actually lower the interest rate. And I think that's the dominant effect. But yeah, I think there is a case to be made that at some point, if tariffs are enacted, creates inflation, it might see interest rates go up again. Yeah.
I always forget the connection between inflation and interest rates going up or down. I can never remember. Or I think there is a connection, but I figured I'd ask.
No, for sure. And higher inflation means higher interest rates.
Okay. I always thought it was the opposite,
and so if you put a tax, higher inflation, a tariff, higher inflation, then higher interest rates.
Right.
Flip side of that is the tariff also slows down the economy, which tends to slow down inflation. So inflation coming down, lower tariffs. So it's two effects that are opposite.
Okay.
And I think the dominant effect is tariffs are bad for the economy. And if we have tariffs, if we face tariffs, we're going to have a worse economy, and then that leads to lower interest rates. I think that's the dominant effect.
Perfect.
But again, to your point, lots of uncertainty, and who knows, right? We could have the opposite effect. Yeah.
Ooh, I'm curious, JP. So now I'm zipping over to spring of 2026. What are Tracy and JP talking about?
Well,
I'm thinking out loud. Wow.
Let's put it on the record, right? I do think, and then we can revisit, like a year from now. But I do think that we're looking at a farmland market that will be a lot more, I'm going to say stable, but I don't mean to say no fluctuations. But I don't think you and I will be talking about a 9.3. Let's put it this way. I don't think you and I will be talking about a 9.3% increase next year. I think it's going to be much lower than that.
Okay.
But as I said at the very beginning, I kind of always come up with that point, and I kind of always, quote unquote, surprised that we didn't see the rate of increase in farmland values come down as much as I anticipated. But I think in this case, with everything that's going on, I do think that we're likely to see the land values not go as high as what we've seen, you and I have discussed over the last 3 years, basically.
I'm going to put my guess on the same. Just getting the gauge of farmers and the feeling out there, the uncertainty. I mean, we're not figuring things out trade and tariff wise, like right away. I have a feeling we're going to be bumping along. So that uncertainty will probably bump along.
Absolutely. And then it will have an impact as we're speaking, in the almost 12 months from now. So
I'm guessing so too. Okay. Should we do a wager, JP?
Yeah. Over under, right? So
yeah. I always love our conversation. You're so well connected. You have such a worldview on agriculture, the economy, everything. So JP, I appreciate your time. If you have any final parting words and any directions on how people can access the report, the land value report, that'd be great.
Yeah. So just, to access the report, fcc.ca. And then if you search real quick, Farmland Values, that will bring you to a page with a wealth of information, as I said, able to zoom in on your region and so forth. And I would say, I think, let's make sure that being business savvy in this environment means being able to be agile and reassess where you're at in your business, right? Don't stick to a marketing plan without looking at it and being able to reassess, because the economy, the economic environment, commodity prices, all that's going to evolve real fast, I think, in 2025.
I love that. Those are amazing words of wisdom to part with. So, JP, as always, thank you so much for this wonderful conversation and for your time here. Thank you.
Really appreciate the invite, Tracy, as usual. Thanks so much.
My pleasure. You guys in the audience, if you like this episode as much as I did, like it, share it, and get it out there so other farmers can hear the great insights that JP shared. Thank you, and we'll see you next week.
You've been listening to Impact Farming. For more great episodes and articles designed to help you manage and grow your farming operation, head on over to farmmarketer.com. Don't forget to sign up while you're there. We will see you on the next episode.